Citi's latest report, Tokenization 2030, Wall Street on-chain, outlines a significant shift in how blockchain is being integrated into traditional financial systems. The report highlights the growing adoption of blockchain for real-world assets, suggesting a fundamental transformation in the financial landscape. Currently, the valuation of tokenized assets stands at $17 billion, but Citi forecasts this could reach $5.5 trillion by 2030. However, the final valuation could vary between $2.7 trillion and $8.2 trillion, depending on market conditions. This range indicates the uncertainty and volatility still present in the early stages of blockchain adoption in finance. The report identifies major U.S. financial institutions as key players. In this transition, the Depository Trust and Clearing Corporation, DTCC, and the New York Stock Exchange are leading the way in integrating blockchain-based systems. DTCC is planning to launch tokenized securities transactions on a limited scale by July, with a full platform expected by October. This timeline suggests a rapid deployment and a growing confidence in the technology's reliability and scalability. Nasdaq is also making strides in blockchain adoption, aiming to issue blockchain-based equities by 2027. Meanwhile, the Intercontinental Exchange is advancing its own tokenized solutions. These developments signal a coordinated effort among major financial institutions to transition traditional markets onto blockchain infrastructure. The report also. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Points to a broader trend in blockchain adoption, driven by the maturation of stablecoins and other digital money tools. Projections indicate the stablecoin market could reach $1.9 trillion by 2030, which would enable faster and smoother transactions between traditional and digital financial systems. This growth in stablecoins is a key enabler of blockchain integration, as it provides a stable and liquid bridge between cash and digital formats. The report emphasizes that blockchain is not just a technological shift, but a structural one. The inclusion of tokenization in capital markets by institutions like DTCC and the New York Stock Exchange represents a pivotal threshold. This transition is not just about efficiency, it's about redefining the very infrastructure of financial systems. The report suggests that the global reserve currency is moving onto blockchain, which could have profound implications for monetary policy and financial regulation. One of the key drivers of this shift is the potential for increased demand in U.S. Treasury securities. The report estimates a possible $1 trillion increase in demand for these securities, driven in part by tokenization. This could lead to greater liquidity and accessibility in government bond markets, which are currently dominated by institutional investors. Despite the optimism, the report acknowledges the uncertainties surrounding blockchain integration. The projected growth of tokenized assets is subject to regulatory changes, market volatility, and technological risks. The projected $5.5 trillion valuation by 2030 is a best-case scenario, and the lower bound of $2.7 trillion reflects the potential for slower adoption or regulatory hurdles. The next key signal to watch is the actual implementation of tokenized securities by institutions like DTCC and the New York Stock Exchange. The success or failure of these early-stage platforms will provide valuable insight into the scalability and viability of blockchain in capital markets. If these platforms prove effective, it could accelerate adoption across the industry and lead to broader regulatory support. The report. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Also highlights the role of stablecoins in facilitating this transition. As stablecoins continue to grow in size and stability, they will play an increasingly important role in bridging traditional and digital financial systems. This could lead to a more interconnected and efficient global financial infrastructure. In summary, the report outlines a significant shift in the financial landscape driven by blockchain integration. Major financial institutions are leading the way in adopting this technology, and the projected growth of tokenized assets suggests a massive transformation in how financial systems operate. The next signal to watch is the implementation of tokenized securities platforms and the continued growth of stablecoins.